is the rationale behind this move? Is it a complementary business? Does it make sense? Or is there more to this strategy? Viren Shetty is joining us now, Executive Vice Chairman, Narayana Health. Viren, very good morning. Great to speak with you on NDTV Profit. Let's begin by understanding why you want to venture into the health insurance space.
Well, why not? The thing that most patients complain about is the cost of a surgery. And we spent the last 20 years doing everything we can to bring in efficiencies and reduce the cost. But at the end of the day, you take something that costs 10 lakh rupees, you make it 2 lakh rupees, you make it 200 rupees. It's not something anyone's happy to pay, because health expenses are always unexpected and you never feel happy about paying it. But insurance is an expense that everyone is willing to pay monthly. And so this is the only way we feel that we can reduce the cost for our customers, by offering it in such a way that you're just paying small amounts every month and we take care of everything else.
It's a tough space to be in. There are 5 standalone insurers. You will be the 6th. Let's start with the plan to begin this. When will you start? What will the rollout look like?
Optimistically, we want to start by Q4. We would start with a pilot program. All in Karnataka. We will start in Bangalore and Mysore with 2 sets of offerings, which are targeted more towards the middle class and lower middle class. And the idea for us is to provide what we call integrated care, which is not just surgeries, because anyone can do that, but for us to be able to offer preventative care, to offer checkups, medicines, outpatient benefits. That is something that will make this very different from what traditionally people would buy online.
Yeah, I was reading an interview with Dr. Devi Shetty, and he also talked about the differentiator will be that you won't have an exclusionary policy on pre-existing diseases. Can you elaborate on that? And if you do that, then how will this be a profitable business?
Well, at this point, profit is almost the last thing on our mind. The most important thing for us is to prove to ourselves that this is something we can do. More health, less insurance. If you run it as an insurance company, obviously you're going to do things like deny people with pre-existing conditions, find any reason to deny a claim. But we are in the healthcare business and we want to offer healthcare to all our customers. And we have a belief that even with someone who has a surgery, who has diabetes, who has a chronic condition, that condition can be managed. Now, it may be more expensive, it may require a lot more work, but that's what we as a hospital organization know how to do. And so if we're able to price it appropriately, we believe that even people with pre-existing conditions can be insured and taken care over long periods of time.
You know, coming to why it's such a tough business, your penetration, I believe, is of the sector is about 1% odd of the population. It makes sense for everyone to have a health insurance, and instead of being stuck with a big bill at the end of it. India has some of the highest out-of-pocket expense rates in the world. How are you going to break that? And as a new player, how are you going to break that?
See, in any forum that I go to and I ask large groups of people, are you happy with the health insurance offering that you have? And it's very rare that you find people that are thrilled with the way it is currently structured. There are teething troubles. There is a way in which things are structured right now that doesn't generate a lot of satisfaction with people who have insurance. So how we plan to break that is, one, to make something that people love, that is absolutely enjoyable, that provides comprehensive care. And so that people get used to the idea that, yes, insurance is something I should go for, rather than what happens right now where people are just playing dice, where you just say, okay, forget, if it happens to me, I'll go to the hospital and pay. If we can break that mindset and get sufficient people interested in the idea of insurance, that will do something that is of great value and more people will take it up. But right now, it's just not something people feel that they have to have.
And how will you compete with current players? Will you have lower premiums or more competitive premiums or a better tie-up with your own chain of hospitals? How is this a complementary business and how will you compete?
We're not looking to compete on price. This is something that by design will take an older and a more complicated set of people. So this will cost more. But what we're going to do is that this will offer a lot more. With tie-ups with our hospitals and our clinics and a lot of online offerings, we will manage the whole experience a lot better than is currently being done. It will operate at a lot smaller scale, and we're starting out in Karnataka for that precise reason, because we can control a lot of the variables there. So we want to compete on the experience. We want to compete on how good you feel about having insurance and that you want to keep investing in this again and again.
Viren, you said that profits are the last thing on your mind, and I understand that as a societal need. This is huge, and I'm glad you guys are doing it. But you are a listed company. Your shareholders are going to wonder if this is going to make sense for your core business, which is doing pretty well, which is the hospital chain business. Can you address that?
See, it does not need to make a lot of money, because an insurance company that makes a lot of money is one also that is not generating a lot of happy customers. You don't need to lose money at scale. So we're not looking to expand across the country. We're not looking to blow up a huge amount of money. This is something that we are trying out in one state in our network, and we will control a lot of the variables, and we'll run it in such a way that generates a lot of customer satisfaction. We'll figure out monetization later. And by the way, most of the health insurance companies aren't making money on their book either at the scale that they have. So clearly, more policies isn't always the ticket for making a lot of money. So let's try something different.
Yeah, the idea is not to lose money. All right, let me just get your take on the core business, the hospital business. Can you share your outlook for the close of FY24 and going into FY25? Where do you see the expansion coming in, the capex coming in?
Most of the capex is in our existing network. We are investing in all our large hospitals in Bangalore, in Calcutta, in refurbishing a lot of the old infrastructure that we have, and adding beds, cath labs, radiation oncology, both in Cayman and in India. We're investing in the existing network. Most of these will come online, maybe not by this year, but starting next financial year. And the next 2 years are going to be a very intense build-out phase for us, where we will be spending a lot of capex towards upgrading and adding more infrastructure to what we already have.
It's a conservative approach, isn't it, Viren? Why the hesitation to spread beyond areas where you're already comfortable and well established? I just want to understand the sort of business strategy and outlook.
We're pretty spread out as it is. We're all across the country. We're in Bangalore, Bombay, Delhi. We're in Ahmedabad, Jaipur. It's just that the existing hospitals need a lot more love and attention. They do need a lot more beds. They do need a lot more OTs. And that's where the most immediate need is. Whereas going after new geographies means you're neglecting the older ones.
A lot of analysts are looking at the healthcare sector, and this is, from an investment point of view, as one of the shining sectors of this year, some of the top picks of this year. I want to understand your outlook in terms of what do you think is changing. And, after the sort of spike that was seen post-COVID, etc., it's been a bit of a lull. What is the sort of outlook that you have in terms of footfalls coming in and inpatient versus outpatient?
See, as a country and as a people, Indians are least likely to go for treatment, least likely to take medicine, least likely, even when they know they have a problem, least likely to go after a doctor to get their treatment done. So there is a huge amount of catch-up that is required. Now, what healthcare institutions like us are trying to do is to reduce those barriers to getting treatment by addressing on the cost side, or addressing on the convenience side, or addressing it on the comfort that you have with the doctor side. So a lot of what you're seeing as the post-COVID catch-up pent-up demand, there is some amount of pent-up demand, but there is a huge secular shift towards, as people start living longer, as they start realizing that there are healthcare options that can cure what ails them and allow them to live longer, and by living longer, they can earn more money. It becomes a very easy calculus to make. So the long-term trends is that people will access more healthcare for a very long period of time to come. Now, the onus for us in what we do in response to that is to provide a superlative healthcare experience without burdening people's pocketbooks too much. And that we find is that going after insurance and addressing the affordability angle is a better way to address that, rather than just blindly adding more beds all over the place.
Yeah, just one last question, Viren. Government push for a larger healthcare coverage has grown exponentially in the last few years. And in fact, this is something that all government, state and center want to push. There are subsidies. I want to understand how it plays into the hospital business. Does it help in terms of coverage? Or is it, a hindrance in terms of the parameters or the conditions that government-run schemes set for you?
So the government Ayushman programs address the people that are earning less than $1 a day. So these are people at the absolute bottom of the pyramid. And these are patients who otherwise have no options available. So for them, this is an absolute lifesaver. Now, every hospital will have certain amount of excess capacity. where you may not make money treating these sorts of patients, but on a marginal cost basis. If you say that, fine, at least it pays for the medicine in certain specialties, you can fill up certain excess capacity with those patients. And so for us, about 20% of our beds are kept normally for patients coming under these government programs. And that's good enough. Now, it is not the panacea for the healthcare sector because, like I said, the reimbursement isn't great. It would actually be better served if the government funding went towards a government institution. But anyway, for now, it's going to the private sector. But overall, the larger game for us is addressing affordability through insurance. And that we feel will be a much better way of having more and more people get healthy rather than current system, which is paying out of pocket.
Absolutely. Thank you so much, Viren. Pleasure speaking with you on the show this morning. And the big takeaway there, a foray into the health insurance business with a very specific target audience in mind. So that was an interesting conversation to have. We'll take a very short break at this point, but stay tuned. When we come back, we're talking about the auto space, and it's not just Bajaj Auto that's buzzing, it's a lot more.
Welcome back. You're watching India Market Open. It's a pleasant morning on the Lal Street. Lots of buying coming in across the board. The broader markets are trading firm. The benchmark also keeping itself together this morning. One sector that's in focus and has been rather even yesterday has been the auto pack. Of course, this morning the story, then the day belongs to Bajaj Auto for other reasons. But auto numbers is what we're all anticipating and looking at as we go into earnings season as well. Manish Raj Singhania, President FADA, and Aditya Velkar, Senior Research Analyst, Metals and Auto Access Security, joins in. Thank you, gentlemen, for joining us this morning on NDTV Profit. Manish, I'll come to you first. How have you read the data in terms of numbers that you've gotten for December? What is the picture looking like? Are numbers improving? Are sales improving for two-wheelers, passenger vehicles, and commercial vehicles, or the trend is slightly more subdued than expected?
So December has been a good month for the auto retail industry, with registering an overall growth of almost 21% compared to last year, with two-wheeler registering almost 27% and passenger car registering almost 3% growth. So it has been a good year, good calendar year end, and primarily it contributed because of the price hike that was planned in the month of January. After 3 years, almost 3 years, consumers in the market saw the December end schemes coming in, and since the dealer paid up stocks were pretty high, that eventually leads to very good schemes for the consumer in the market. So that also prompted the sales of vehicles, and on top of that, first 15 days were the marriage season, and the marriage season contributes greatly towards the sale of two-wheeler. So that was another impetus, and plus the rising MSP that the central government disburses to the farmers, that has kind of refurbished the rural economy. So two-wheeler has been doing good. When we started this year, April to August, we were in a negative growth. But with the start of festive season and end of December, we are seeing a steady growth in the two-wheeler industry. That shows that the entry-level two-wheeler as well as the rural economy has kind of started responding well in this last couple, 3-4 months. But the trend needs to be observed for confidently say that rural is out of distress, and two-wheeler would continue this growth trend as we saw in the last month.
Manish, I think that is critical, right? So while December has been a good month, you had the festive buying, lots of factors that could have contributed to this. Rural, like you said, is coming back as well. If I ask you in terms of expectation and trend, what are you picking up from dealers? Does it seem like this trend could continue, and back of inquiries, maybe bookings potentially, and also discounts? Is that also been a key trigger why sales have done so well, and where do inventories really stand for most of the auto players, for most of the dealers?
Yeah, so I'll go segment-wise in this. In passenger car, the inventory levels are very high. We are almost at 55-58 days paid up, and which amounts to almost 6.5 lakh or 7 lakh vehicles in stock with the dealers. So that's a huge stock. Whenever dealers have stocks, and we are opening the 23 models with this stock level in the next year. So obviously consumer schemes will definitely go up. Not only dealers will come forward, the OEMs will also contribute in consumer schemes. So that's a good time for the consumer. During the last 2-3 years, we saw heavy booking period, waiting period going up to 2 years. Now that has come down substantially on an average to 3 to 4 months, and that also only on very select variants now. So a good time for consumer coming in. Availability is very much there, and plus, these schemes have also started coming in. And in the two-wheeler space, stock levels are at a very comfortable level. Sales have grown. I think OEMs are managing, two-wheeler OEMs are managing their dealers better there. And we confidently feel that two-wheeler industry will continue to see some growth in the last quarter. Because the last quarter of the financial year is always good for the auto industry. And sometimes it turns out to be the best quarter because of depreciation benefits and a lot of marriage season coming in from 15th of January, and a lot of festivals also coming in. So I think last quarter will also end up pretty well with good discount for consumers, especially in PV segment.
You want to comment on this one? It seems like from all the data that has been rolling in, there has been a structural change potentially that's underway in the two-wheeler segment. 100cc is not as attractive anymore. Gen Z doesn't enjoy riding bikes like they did. The shift clearly is towards either luxury in that sense, or bikes like Royal Enfield potentially, or the new offerings that are coming from the Hero and the Bajaj stable. How do you play the two-wheeler space? Do you also, in terms of preference, like a Hero and Bajaj, or are you going with an Eicher on back of Royal Enfield?
So is that question?
Yes, Aditya, that's for you.
Yeah, I think, good morning. So that's right. We are witnessing a premiumization trend in two-wheelers also. And as you have rightly pointed out, even Hero is launching vehicles in the higher CC segments. So that trend is visible. So for Bajaj Auto, if you see, they have managed a good amount of market share in 125cc plus segment at 30% plus. And even Hero MotoCorp, they have launched in collaboration with Harley Davidson. They have their bookings of Charisma and HD 440 that they are also picking up well, and they all plan to ramp up these executive and these premium vehicles by this year end to 10,000 units per month. So that trend is visible, but at the same time, we are optimistic that there might be some green shoots in the rural recovery also, which will benefit Hero MotoCorp. So the kind of weakness which we have seen in the rural recovery, in the rural demand, and which has impacted the entry level vehicles, that may drag out. But we have to continuously monitor that trend. So that is one green shoot and monitorable, which we will have to see in the coming months.
Right. Aditya, in that case, I want to also quickly get a view from you on Bajaj Auto, since you're fortunately in the studios with us today. With a big, massive buyback, what does it mean for shareholders of Bajaj Auto? And also in pecking order, your top picks in the auto pack. We also saw numbers from JLR, which look pretty promising.
Yeah, so Bajaj has declared a buyback at rupees 10,000 per share, which is at a premium to the current market price. So that is one positive. And buyback is always efficient way of giving back the back to the shareholders. So Bajaj Auto also has a tailwind that if the exports they almost contribute 50% to exports, and if the exports market recover, especially Nigeria and Argentina, then that kind of tailwind is also there. Their three-wheeler portfolio has done well. So part of it is already reflected in the stock price. So I think today's move is more reflective of the buyback announcement, which yesterday they have came up with. As far as the pecking order in two-wheelers is concerned, I think we like all the three two-wheelers. Each two-wheeler has its own characteristics. So Bajaj, as I said, the exports recovery is impending, and the Bajaj will be a beneficiary if that happens. Same for TVS. TVS iQube is doing quite well, and it is now second number in terms of the market share in electric vehicle two-wheelers. And TVS exports also can pick up if Bajaj pick up, and TVS can also pick up. So the export tailwind is for both these companies. Only concern for TVS is that the valuations are slightly gone ahead, and the stock is now trading at almost 38x its 12-month forward P ratio. But still, if the exports pick up, then TVS can also have a further tailwinds, and even it can rise from the current level. Hero MotoCorp, as I said, it has a tailwind of rural recovery, which has not yet fully broad-based rural recovery can definitely drive further re-rating in Hero MotoCorp. For Eicher, we are not that bullish as compared to these three stocks, because the exports have not picked up for Eicher as was expected. But the kind of motorcycles they have brought in, that Himalayan 450 and all, they have a good stable in their product portfolio. We have to wait and see how the competitives like HD, Harley Davidson 440 and Triumph impacts Eicher. That is one monitorable. So as of now, we are not very bullish on Eicher, but for other three two-wheeler stocks, we are we have a buy rating, and we continue to monitor them for further re-rating.
Thank you, Manish. Thank you, Aditya. We'd have loved to chat with you longer, but we're sort of short of time. Hopefully, we'll catch you both soon. With that, it's a wrap on India Market Open. Thanks for watching.